This is Don DeBartolo, a broker with Daniels Trading in Chicago, and today we're going to discuss order types. This will be an introduction to several order types you can use in the commodity marketplace. I'm going to show you the way that I first learned the different order types, so you'll need a sheet of paper and a pen. Go ahead and pause the video and I'll wait for you. Ready? Let's get started. First thing you'll want to do is draw a vertical line on your sheet of paper. This is our y-axis. Next, draw a horizontal line. This is our x-axis, and now we've created a grid. We're then going to label the left side of our grid the buy side. And the right side of our grid will be the sell side. Next, we're going to label the horizontal line. We're going to label this market. This is the current market price, and brings us to our first order, a market order. Market order tells the broker to buy or sell at the current market price. So if you're buying, you'll be filled at the current ask price, or if you're selling, at the current bid price. Two other order types that are used are market on open and market on close orders. A market on open order will be filled within the opening range, and the market on close order will be filled within the closing range. Next, we're going to go to the bottom left-hand quadrant and label this limit. This is a buy limit order. It's placed at or below the current market price. This order can be used to enter or exit a trade. A buy limit specifies a price that the trader is willing to pay or accept. You'll sometimes hear or better. So that means at your price or lower. Next, we're going to label the top left-hand quadrant. This will be labeled stop. A buy stop is placed above the current market price. A buy stop order specifies a price at which an order is to be executed. Once a stop price is hit, the order becomes a market order and is executed at the best price possible. Since the stop order becomes a market order, the actual fill price may be beyond the stop price, especially in a fast market condition. If a market reached its daily price fluctuation limit, or limit move, it may be impossible to execute a stop loss order. From the broker's perspective, there's no difference between a stop or a stop loss. So when entering a stop order, just say stop. So again, a buy stop can be used to establish a new position, limit a loss on an existing position, or just protect a profit. So if you have a short position and you place your buy stop above the market, that limits your loss. You can also place that buy stop above the market to initiate a new long position. Or after the market moves lower, the buy stop could be lowered to protect profits. That's known as a trailing stop. Next, we're going over to the sell side. In the top right-hand quadrant, you're going to label this limit. This is a sell limit order. Sell limit is placed at or above the current market price. This order can be used to enter or exit a trade. It specifies a price that the trader is willing to pay or accept. Again, you'll hear or better. That means at your price or higher. In the bottom right-hand quadrant, we're going to list that as a stop. A sell stop is placed below the current market price. A stop order specifies a price at which an order is to be executed. Once the stop price is hit, the order becomes a market order and is executed at the best price possible. Since a stop order becomes a market order, the actual fill price may be beyond the stop price, especially in fast market conditions. If a market reaches its daily price fluctuation limit, a limit move, it may be impossible to execute a stop loss order. Remember, again, from a broker's perspective, there is no difference between a stop or a stop loss. So when entering a stop order, just say stop. And just like a buy stop, a sell stop can be used to establish a new position, limit a loss on an existing position, or protect a profit. So in a long position, the sell stop is placed below the market to limit a loss, or below the market to initiate a new short position. Or after the market moves higher, the stop can be raised to protect the profit. Again, that's known as a trailing stop. So keep this chart handy when you're placing orders, whether you're placing them on one of our online trading platforms or calling your broker. At Daniels Trading, our motto is excellence through execution. So if you're not sure what order type you should be using, just contact your Daniels Trading broker, and we'll make sure that the correct order type is being used for the order. Before we go, take some time to read this risk disclosure. Thank you for joining me today. I hope this was a useful exercise in understanding the different order types in the marketplace. If you have any questions, do not hesitate to give us a call. Thank you and happy trading.